that was a very clear message, ladies and gentlemen. It's always nice to hear a commissioner using the word insurance and saying act now and not in 20 years from now. So it is an issue which of course is relevant for many member states in the European Union, and there are still member states where governments need to take more action in order to protect the population against the tremendous results of earthquakes or fire that can happen. Now it gives me great pleasure, ladies and gentlemen, to invite to the stage, as the chair of the next panel, Nathalie Berger. Why does it give me great pleasure? Because she's my successor. And of course, as you will see, it's a major improvement on the past. Nathalie, please come to the stage. She is Head of Insurance and Pensions at the European Commission, something which you do not become because you want to become that. If you ask any head of unit of the Commission, do you want to deal with insurance and pensions?
Yes.
The likelihood is probably no, but Nathalie, please, you have the floor now.
Thank you so much. Thank you so much, and yes, thank you for giving me the honor to moderate this panel. The Commissioner was just mentioning that we need to act today, not tomorrow, but we need to act for tomorrow. So as we have this wonderful title, Grey Matters, we're going to discuss the pension time bomb. And for this, we have our panelists are going to join us. So we have Gabriel Bernardino, Chairman of EIOPA, and Lard Friese, who is Chairman and CEO of the NN Groups from the Netherlands. Governor Dirk Kempthorne, please join us, President of the Global Federation of Insurance Associations and President and CEO of the American Council of Life Insurers. Ricardo Rodríguez Marengo, member of the board and former CEO, ProVida AFC and MetLife from Chile, and Javier Valle, who is General Director of VidaCaixa in Spain. Please.
Here we go.
I understand that we have a little bit, maybe more than an hour. We are going to discuss very important issues for us all in the room, and not only for us, but for our children and for the children of our children. And we should not forget one thing, that one day they might come to us and ask us, what did you do? And after having asked this question, they will ask another one, or they will say, and don't pretend that you did not know.
Yes, indeed.
And we cannot pretend that we do not know. We're going to discuss the dimension of the problem, but you know, we have some projections, some statistics. I understand that in 2060, 28% of the population will be aged over 65 years, whereas in 2013, it was only 18% of the population. And by that time, there will be only 56% of the population between the age of 15 and 64, where there was 66% of the population in 2013 in this age category. The pension gap is estimated at 2 trillion euros a year, and we will listen to your views on this. So this means that people who are going to retire in between now and 2057 will need to save an additional 2 trillion euros a year in order to achieve an adequate income and retirement. But there is one positive news about this, and this is that in this room we have all those who can together do the thinking and take the measures in order to contribute, to respond to the time bomb. And here we will be able to listen to examples, experience from within the European Union and from outside the European Union. But to start with, I would like to ask our panelists about their views on how big the problem is. And particularly, I would like to see a comparative vision in between the Union, the European Union, and our friends who are from beyond the European Union, as we have the privilege to have people from the United States and from Chile. Is the current pension system sustainable? Are we being honest and open about it? Do governments need to be more stark in their warnings? And what about the European Union? Is action needed at European Union level? So, should we maybe start with those who are not in the European Union to share their vision of this pension times bomb? How big is the problem, and then we'll come to panelists from the European Union. So maybe Dirk, would you like to start?
Nathalie, thank you. The answer to your question is no, yes, and yes.
Done.
No, the current system is not sustainable. In the United States, when they began Social Security in 1935, there were 12 workers for one retiree. We're now at 3 to 1. I think that's probably true throughout the world. Japan, it's 2 to 1. That is not sustainable. Do we need more action? Without question. The reason I really appreciate this panel is taking place is because it is not a hypothetical situation. This is there on the horizon. So Michaela, well done, you and your team. I too am honored to be with all of you on this stage. When you ask the scenario of what will you say if your children ask you, why didn't you? What about a few years beyond that, when you may be the elder laying on the exam table and no longer have influence, you do not feel well, and then you say, why didn't I do something?
Yep.
All right? And it's not just the wonderful leaders in this room, it's government leaders as well. Social Security Administration in the United States has already announced that in 10 years, absent something happening, they'll have to reduce benefits by 21 to 27%.
Yep.
How many companies who have people with annuities that are guaranteed can tell them, we're going to reduce it? There will be a firestorm on Capitol Hill when that occurs. Government that too often looks in 2-year increments. The next election, this thing is really moving quickly toward us. One of the things that some of the leaders in Congress are saying is, during tax reform, don't damage the industry that is the private sector solution to a very thin government safety net. We are the solution, ladies and gentlemen. We're not the problem. But we will exacerbate the problem if we don't tell the story. We have the answers, we have the solutions. And I know that today we're going to get into that. But I think the tragedy is, because of the people turning 65, because of longevity, 50% will turn 85. What happens when you live beyond the retirement income you thought you had set aside? You will achieve dignity at some point in your life and then outlive it. That's not proper. We all have a purpose to do, and I look forward to getting into further details.
Thank you very much. Ricardo, how big is the problem in South America?
Well, in emerging markets, really, the problem is really big too. And we have life expectancy, and the birth rate is going really is growing the life expectancy and coming down the birth rate very quickly like the developed countries. So we are facing the same problems that developed countries. And the other thing is that the labor market is changing. Some of our products are designed for people beginning working at 20 years in a company and then continue working in the same company, perhaps changing 2 or 3 times in their life cycle. And nowadays, the young people have a different mindset. They are working more on a freelance-driven mindset. They change very quickly. Sometimes they decide not to work for a period. So I think that we have to redesign a lot of our products, and we have to change very quickly. Changing is not that you have to change in a moment. Perhaps the transition period could be long, but there's a lot of things, not only in life expectancy and birth rate, also in the nature of work and what it means to retire. Nowadays, we have on mind in South America 60 years for women, 65 years for men. And well, this is not what is happening nowadays. People at 80 are playing tennis. So we have to rethink what is to retire. And if a retirement age could be something that we need to how can I say, to change in a more frequent base.
Thank you. This sets, of course, the question of the role of the public authorities. And it takes me to Lard, as you come from a country where there has been a lot of focus on the pension system and the pension reform. So how do you look at this problem?
Well, I think it's, apart from the size of the issue, which is big, I think, everywhere, the inertia to act is a real problem. And the inertia to act is, I think, stems from vested interest.
Yes.
There are no easy solutions, and therefore something's got to give. And there are different interests from different parties involved. And the second dimension is the reality of politics, where governments change every now and then, as democracies are elections. And as a result, you see a problem that demography completely, demography completely ignores. I mean, the demographic nature, so people getting older and the change of demography that you were saying across Europe is happening. They are demographics, reality is agnostic from all these political inertia that is being created by attacking the issue. So I think that's a real issue. In the Netherlands was always touted to have, prided itself to have a pension system that was fully funded, and that the pension funds were so brilliant and all that. And to be perfectly honest, we have a massive debate in our country about the sustainability of the pension scheme. We have a large gender gap in the Netherlands, something that we shouldn't be proud of at all. And there is a debate raging for a number of years now in the Netherlands about what to do. And also I see there the inability of finding the right solutions and getting into action. The government in the Netherlands has launched, and I think that was very wise to do, a couple of years back, a pension debate. And this was on the back of a growing concern during the financial crisis, where in fact pension funds were cutting pensions. So we have seen in the Netherlands people seeing their pensions cut. Yep. And as a result, social unrest and the like. Now, currently this administration, this government, is now faced with the task that it's put upon itself to say, we will be the ones that will cut the cord and that will get to solutions. And I would say also from this stage, I would urge them on, because the only thing that I'm seeing is that they're now retracting from it, and that inertia will again replace the need for real action. And I think real action is in fact needed, and it's needed now.
Thank you. Thank you very much. Javier, we have the privilege of being hosted in this beautiful city, in this beautiful country. But I also understand that there is a real issue in Spain about the pension gap. There is a real demographic issue. So can you say a few words on this, and how do you look at it from your point of view?
Of course. First of all, I would like to thank you for the invitation. It is a pleasure to be with you in this session. I would say that in this case, Spain is not different. And in fact, if Europe and the world is aging, Spain is aging even in a more accelerating way. According to the OECD, the dependency rate... Do you hear me? Yes. In the year 2050 will be the highest ratio in the world after Japan, which means that the majority of the population will be older than 65 years. This gives you an idea of the challenge in demographic terms that this means for the economy and for the public systems in general. No? I think that this is just the demographic part, but the situation in Spain is as well difficult and special. The replacement rate is the highest in the OECD as well, between the pay-as-you-go systems. About 82% compared to the 57% of the average of the OECD. This, according to several international bodies, that suggest that this is going to mean a convergence to the OECD average. Gives you an idea as well of the problems we can face. On the other hand, if you look at the third pillar, there is really a small investment in private pension plans. Lower than 10% of the GDP is invested in private pension plans, which is clearly below the average of the OECD, which is 37%. No? So this gives you an interesting picture. I would say I'm fully convinced of the need of the public pension system. I think this is necessary. This is the core of our welfare state. On the other hand, it seems that reforms will have to be undergo in the medium term, that's clear. But what I'm very convinced as well is that there is a growing need and a very strong demand for long-term savings in the population. This is going to increase, and I think that we have to do a lot of things to help the population to support in this aspect. Thank you.
Thank you. Gabriel, we have heard some very interesting feedback about the experience in 2 member states, in the US and in Chile. There is an overall consensus on the fact that the problem is huge, that action is needed, possibly action at regulatory level. Then, of course, the question is action at the European Union level, action at the level of the states, of the member states, and, of course, action at the level of industry, because nothing can be done in isolation, and everything will be efficient if we have complementary efforts. So what is your point of view as chairman of EIOPA?
Well, thank you very much for the invitation. And to the ladies there, these 3 ladies there, I just want to give a compliment. Pilar, Mirenchu, Micaela, muchas gracias por estar aquí. Es un placer estar en Madrid. And don't worry that I will not use my Portuñol more. Yeah. So just this. Now, of course, there needs to be action. And I was just remembering right now, when I started to work in this area close to 30 years ago already, this was, believe it or not, one of the issues already in the agenda. Yeah, exactly. And that's the problem, because we all know that the system is not sustainable, A. The second thing which I believe is that now there is, I hope, a conscience by everybody that the issue is not, I would say, a kind of ideological discussion between state, companies, or individual systems. We need all the 3 elements. There's no silver bullet also, but there needs to be action. And we discuss, but then the courage to go ahead and to take decisions is where the problem lies. And there needs to be, of course, good, sound technical analysis, good regulatory initiatives, but at the end, let's be honest, it all boils down to political decisions. And political decisions from also the Commission side, but definitely political decisions at the national side. And it's interesting, if you look back, if we look at the 3 pillars, they all have challenges. And we have seen on the first pillar, on the social security side, actually, I think, with a mix of national pushes, but also Commission pushes, we have seen a number of adjustments in the social security systems in order to make them much more resilient in terms of the equilibrium of public finances, and all of that is good. But there's a consequence. And the consequence is, of course, that the replacement ratios will go down. The recent numbers that I've seen from the Commission give a clear indication. In a period of 20 years, there's a number of countries which, because, of course, of this equilibrium of the system, will have the replacement ratios really going down. Actually, you know what are the two countries that are going to be more affected? Peninsula Iberica. Portugal and Spain are the ones that are going to get a lower replacement ratio, where the difference will be the biggest one. And what I regret is that at the same time that this sound basis to push for adjustments in the first pillar is not done at the same time with a similar push to build sustainable second and third pillar. And the debate about if it should be second or third, and I think it's completely useless. We need both. Everybody would, we would need, of course, to have companies building up company pension plans. Very good. We need to have more of that. We need to have, of course, more third pillar, and to have also the possibility, as we are now pushing in Europe with the PEP, to have also the internal market working for us. But let's not fool ourselves. All of this has some political costs. There are no silver bullets in here. There's no silver bullets. It's second pillar. You need to have either more contributions or reduce the pensions, because the nice promises that were made in the past, let's be honest, they are not sustainable.
But we can help.
Yes, exactly.
But we can
help. There are possibility of solutions. I think that the sector can help, but at the end of the day, I think it needs to be political courage also to take the decisions. And just one thing that's the key issue that I believe at the end of the day there. And it's not popular. There needs to be, at some point in time, some level of compulsion. What you have seen, for example, in the UK, with the auto-enrollment process, I think it could be a good blueprint for other measures throughout Europe. There's an element which is, of course, not politically nice, but that's what should be done.
Thank you, Gabriel. A very interesting point that you raised, and maybe the audience would like to send some reactions or questions on this through the app. Ricardo, I understand that in Chile you might have found some solution to this big time bomb, to the pension gap, to a certain extent at least. So can you say a few words about how you proceeded? How did you do that?
Well, first I would like to point out that we have a lot of problems and a lot of things looking ahead to improve. But it's true that Chile did a great shift in 1981, replacing the pay-as-you-go system to a new one based on individual saving accounts. So Chile is paying the transition during the last 36, 37 years. The cost of the remaining system is 2% and going down, and no charges on salaries. So imagine this a different situation from most of the countries. And at the same time, these individual saving accounts are managed by single-purpose companies. I think that was a good idea because it preserves the managers from most of the conflict of interest that you may have managing $200 billion in Chile. Is more than 75% to GDP. Yeah. When you add the money managed by insurance companies in annuities, more than 40 billion, you have 90% to GDP. And the performance were very good during the last years, above really the original projections. And I think that the good news is that we have a lot of things to solve, but this system is only charging 10% plus the insurance and fees, so little more than 12% on salaries. So we have room to grow in terms of contributions. And there's an agreement to grow 4 to 5% in contributions to improve pensions in the future. And in the short run, really the solidarity pillar that was introduced by Bachelet in 2008 only cost 0.8% to GDP. So, well, Piñera is announcing that Chile will increase the solidarity pillar 40%, and this is going to 1.2% to GDP. So, as you can see, there are numbers that are really a great opportunity to solve the main problems that we have today and we need to solve. And that's the reason why Chile's system is very well ranked in terms of adequacy, sustainability, transparency. So I'm not saying that it's perfect. We have a lot of things to improve, a lot of problems. There are a lot of complaints of people trying to go back to a pay-as-you-go system, particularly people that didn't contribute during these years. But of course, this is really a very case to study, and it's a very good example of things that you can do if you take the right decisions in advance, 36 years ago.
Thank you. A great example of a common action or complementary action in between the regulator and the industry. So, of course, we will be looking forward and monitoring how the situation evolves in Chile. Javier, how is it in Spain? What about Spain? Can you mention something which would be ongoing?
Yeah. One of the reflections I would like to share with you is that all the changes of this nature are very sensitive from a society point of view. And I think that all of these political changes must be carried out, if possible, under a certain stability, and if possible, with maximum social consensus. I think that we had a good reference in the past in Spain of this approach, which was the Pacto de Toledo, what we call the Toledo Agreement. That was a wide forum where we wanted to stick all the retirement and pensions discussions independent from the changing governments. I think that this type of ideas should be preserved and even enhanced, of course, in Spain, but I think could be a good idea in Europe. That's the first thing. Then I would like to say as well that one of the things that we really should consider put on the table is the second pillar evolution. I'm thinking about Spain, obviously. The second pillar evolution could be really instrumental for the companies to help the citizens to increase the long-term savings, in my view. In the Spanish case, only 8% of the workforce has a company pension plan, which is extremely low, above all if you compare with Central European countries such as Switzerland or Sweden or some others, no, that even have 100% of the GDP invested in these plans. So I think this is an element for reflection. In fact, in one of our surveys of our company, we realized that giving small tax incentives to companies and employees in this evolution could really accelerate and have very positive impacts in GDP, in employment, in savings, while helping to reduce the public finances. No?
Thank you. Lard, I understand that your group is active in numerous countries. So how is it for you to deal or to offer products on such a wide scale? Are there significant differences in between these countries? Is it possible for an insurer to come up with products that fit everywhere? And is there a large potential for economies of scale?
Yeah, thank you very much. Yes, we're operating in 18 markets and in Europe in 11. And we do a lot of work to help provide pension products across many markets. I would argue that there are, of course, local differences. Local tax rules are different, so the incentivization of the pension savings is different. Local regulation is different. The economic developments and therefore the starting point of households is different. But there are also a number of things the same. Yeah, so I would also like to go to the solution and see what the industry can do. I think we have a real opportunity here as an industry to help and contribute to the solution of this pension problem that we have, and there's a number of them. Number one, we want that people save more. We want them to start saving earlier, because that's one of the biggest problems. They tackle the problem way too late. I'm trying to get my kids to start talking and thinking about their pensions at 26 or 27, and they still don't do it, right? So that's the second thing. They need to save more, they need to start earlier. The money needs to be managed well. Mm-hmm. And finally, I would say we need some incentivization, because compulsory is one thing, but maybe some incentivization, either through taxes or otherwise, are very important to entice people to do this. And fifth, we need proper governance. So we need stability so that citizens and countries can count on the fact that if they start 5 years or 10 years ago, that their money is going to be safe and that they know what they're going to get in the end. So governance is very important around this as well. Now, I believe that we as an industry have a big role to play here. And what I'm very concerned with is that due to the low interest rates, also due to new Solvency II regulation, to some extent, longevity, the insurance industry has massively moved out of providing guarantees to customers. And we've all moved away from that. And the risk of that is, the reality is that market risk on managing pensions is now taken by retail households. Mm-hmm. Now, I submit to this room, who do you think is better prepared, has more expertise, and the likelihood that they will optimize the investments and managing the money better? Is that retail households across Europe? Or is that the industry, institutional investors? I would argue the latter. But we have collectively moved out of providing guarantees. And we need to get some solutions there. And Gabriel, I think we can do something here. Not here now, but maybe we should reflect on that, because I'm not going to put you on the spot here.
We have been reflecting.
What I think there is a problem is this problem of providing a guarantee to customers on their pensions has two sides. One is the supply side. We need assets with higher yields, long duration, higher yield assets. If you look at current rates, this is all about infrastructure, because that's where the opportunity is for having expanded spreads, higher yields, and as a result, a pickup of those spreads that can actually fund the guarantee. Now, what we would hope is that governments, more than today, would not fund infrastructure investments from their own budgets, but reach out more to the private sector. Yep. Now, the problem with that is if we then all are trying to get into that funding of infrastructure, then what we would need is a little bit of help, which already has taken place, but I think a bit more would help, is that the non-rated financial instruments do not carry the capital charge that they currently carry. If you do that, you free up a bit of room. And if then on the liability side, we would actually accept that pension contracts are long-term contracts, and as a result, they are illiquid, and therefore we do not need to discount them against the most liquid curve in Europe. And if we could give a bit of room there, then the combination of those two things may actually help the sector to move back into what we originally did, which was shoulder market risk for customers for their long-term savings.
Yep.
Thank you. Yes, Gabriel, please.
No, that's the interesting thing. No, but we have discussed this a number of times, and I think we agree on 90%, which is already a very good point. Now, let me just come back to that point, and I think you touched on two elements which are fundamental, because you don't solve the issue only on the asset side or only on the liability side. You need to solve it in a combination.
Correct.
I totally agree that the element of having assets with a longer duration to match properly the liabilities, it's fundamental. Otherwise, basically, what you're doing right now is to buy sovereign bonds, and we know the yields that you've got. So forget about selling a pension product to anyone with those yields. That's clear. But on the liability side, I would agree with you that we could have a better way of reflecting that in terms of the regulatory framework. But my point has always been the same. If we're talking about truly, really illiquid liabilities. And that is something that we need to make clear also to the public. And that was a discussion Nathalie remembers very well when we gave the advice to the Commission on the PEP. Let's not fool ourselves. We cannot have everything at the same time. We cannot have products that deliver yearly guarantees and basically have truly long-term investments. That's not possible, because if you deliver a yearly guarantee, you need to account for that, and you need, of course, to take into account the risk on a yearly basis. Now, what we should do is really to go for a more long-term type of guarantee and a maturity type of guarantee, and that will allow to do much better, I would say, long-term investment also, without the risks of the short-term element. And with that, I think we should be prepared from the regulatory side also to adapt the way that we look at risk, being it in a more long-term than on a short-term volatile. So that's also what EIOPA is starting now to analyze, to look at the liquidity characteristics of the liabilities, and that's really what I would like to push. And the PEP and the idea of the PEP was definitely coming with that. Yep. It was really, pushing for that, and pushing for another element that we haven't talked so much right now, which is the fact that look at why do we have, and we look at those numbers in Europe. The percentage of citizens in Europe, in the European Union, between 25 and 60 that have an individual private savings, 27%. So the potential is huge. Yeah. The potential is there, and as you said, I think we can provide these, but we need also to look at the reality of what we have in there and what are drawbacks and the challenges that we have also in the provision of these third pillar pensions. Cost efficiency, and that means, of course, scale, and that's what Europe can bring to the European citizens, my friends, but we're completely I would say, in this nationalistic approach, and failing to give Europe the added value to the European citizens. Scale, it will bring costs down, first thing. And second thing,
competition as well.
Competition, of course, and transparency. And I think that this element that was mentioned before of products being more simple, not more simplistic, but more simple. And that's where the opportunity lies right now, because there's also the element of technology. And I'm a firm believer that technology can help to link better, the providers and the customers. Because the big thing I think about also the incentives for people to save is that you're flooded with paper. Nobody wants to read pages and pages of paper. That's the first disincentive. There's a lot of bureaucracy in doing insurance. We need to go over this. And I think that we can do something from a regulatory perspective. I believe so. But I think that the industry needs also to go in that direction.
I totally
Let's come to that point, and let's look into what action can be taken from the regulatory side. But we have talked about the role of the industry. We have talked a little bit, but we'll get more to that, about the European Union. We will talk about the PEP. Yes. But before that, I just wanted to ask another question to Lard and to Javier, and which was, you have just mentioned briefly the magic T word, the tax incentives. Yes. But if we look at the other angle, we're talking about incentives, but there's also the whole, I would say, more shady side of the governmental action, I would say. And there I come to the question, what government action affects the provision of pensions and personal pensions, in your experience? So Lard and
what
Javier.
Government action affects it?
Yes.
Positively, you mean?
Yeah, or less positively.
I think stability. Trust is extremely important. This is long term, right? You want young people, or as young as you can get them to do it, to start saving for their retirement, so that they can live their life in dignity also post their productive life. If you want to do that, the provision of trust is absolutely critical, and therefore good governance, so that there is proper transparency on what they annually build up in their pension plan, that they know that it's appropriately governed and managed well, and that there is good competitive dynamics and transparency around it. I think that's what governments can do. What the second thing that governments can do is indeed incentivize. I mean, I understand, but a little bit of, if you incentivize yourself as a government, that people save for themselves, you as a government will not be picking up the bill as much when all these people retire and need to draw upon the health system, et cetera, et cetera. So it's basically an investment that you as a government are doing to ensuring that 20, 30 years from now, those young generations that are working then, which to your point need to provide for many other people who are not working at that point, that you don't put too much of a burden on them. So you need to see as a government the tax incentive as an investment in the future. That's how you need to look at it. Those are my thoughts.
Thank you. Javier, anything to add on this?
Well, probably I would add something which seems not to be so difficult, which is have the maximum information delivered to the citizens with regards to their retirement, pensions, and the like. I mean, I think it is absolutely key that everybody, all the citizens know the best way, what type of public pensions they will have in the future, what type of savings they will have in the future, so that they can take informed and proper decisions today.
Thank you. Dirk, how can policymakers incentivize saving? Is everything in the magical T word in tax incentives, or is there more to it? Is there anything else that they can do?
Let me note, I appreciate the passion that I'm hearing up here. Kind of reminds me when I used to be in the U.S. Senate on the floor. And I'll also say, it's something I believe in, and that is that the industry and the regulators need to be able to talk.
Oh, there you go.
I mean, it's something that we promote at the Global Federation of Insurance Associations. So, what can we do? Gabriel, you mentioned the term political courage. All right. Every night, TV, headlines. Are you seeing the most passive, cooperative, environmental, political atmospheres by the national governments? No. They are fighting. The different political parties fight. Okay? So I'm going to give you a couple examples, because these elements that I'm going to suggest to you are actually contained in legislation which the American Council of Life Insurers has been promoting for some time. And significantly, when it was introduced, it wasn't only introduced by the Republican chair of the committee that had jurisdiction, but also by the ranking member, the opposing party. They did it together. It came out of committee unanimous. This is now past the United States Senate. It's over in the House. So what are the elements of that? Well, we know that most jobs come from small businesses. You know, small businesses that may have 5 to 10 or 12 employees. And yet for a small business and the overhead, they find that it's just, they're too small to afford putting in place some sort of a plan for people to save for retirement. So what we have is the opportunity of multiple employers plan. You join the pool. And if these small businesses will do so, they would receive a $5,000 tax credit, you see. Also, a term that was mentioned is auto-enrollment. It includes auto-enrollment. And again, it says to the employer, if you'll make that a part of this program, there's another tax credit. Now, does auto-enrollment work? Hugh Saville, who is with the Association of British Insurers, but he pointed out yesterday to our meeting that in 2006 in Great Britain, 66% of the people were putting money into some pension plan, okay? In 12, it dropped to 52%, going in the wrong direction. Then they put in place auto-enrollment. Last year, it was at 72%.
There you go.
It makes a difference. And one element that we believe should be in there is opt-out. All right? It's automatic. We're going to include you unless you say, you know what, I don't want to do it. But I'll tell you what, once people see it, they stay. Another element is what we call the Lifetime Income Disclosure Act. This is something that every member of Congress currently has, and all the federal employees of Congress. When they get their annual statement of what they've been paying, down in the corner, it shows them that the amount of money that is in their own personal pension plan, right? That it would yield for the rest of their lives that amount monthly. Now, why is that important? Because for many, if we look at the aggregate number, we see maybe it's 25,000 pounds or euros, dollars, we think, man, upon retirement, we can finally do the remodel and take that one vacation. But if you see it not in the aggregate, but this is how much I would receive for the rest of my life monthly, combined with what I'd get from my government, this isn't going to do it. I think maybe we better put more focus on retirement. Okay? Another time would be simply that it's the lifetime income portability. So if you happen to change jobs, you take it with you. You see? This has now passed the Senate. This week, another piece of legislation passed both houses will now be signed by the President of the United States. Included in that is the Senior Safe Act, which simply is for those senior citizens that may be now in their elder years and they have been saving, but they want to know, what does all that paper mean? How do I now convert this? So you don't have those with unscrupulous practices to say, you know what, let me simplify. I will simply give you a check and I'll take over your accounts, okay? It is unscrupulous and it is criminal. But now again, we have the safeguards in place, okay? That'll be signed by the President. So these are elements that are real, and that even in a politically charged, acrimonious atmosphere, you can have opposing parties say, this is good stuff, let's do it.
Very good.
Yes.
We have launched this initiative, which is quite very much discussed, very much supported by stakeholders, so the PEP, the Pan-European Personal Pension Plan, where we can find some of the answers. And I really believe that this is something which is the outcome of a concerted global effort. We have presented this initiative on the basis of a public consultation with the support and the contributions of industry, of consumer representatives, of some citizens, on the basis of EIOPA advice. And when you were talking about political courage, and when I heard about the tax incentivization, we have, of course, assorted this or accompanied this proposal with a recommendation addressed to the member states, inviting them very strongly to grant the PEP a preferential tax treatment, even where a PEP would not necessarily match all the criteria that are embedded in a local tax regime. So this is an initiative which is being discussed now in Parliament, in Council. It's moving forward well. Gabriel, what is your take on this? Is it, I hope that you think it's a good step. Is it enough? Should we do more? And if we should do more, what is it that we should or we could do more?
Yeah. Well, let me be very honest. It's not a silver bullet. And let's be honest. To solve this problem and this pension time bomb, you need to act on all the areas. And so I firmly believe and sincerely believe that the PEP can give really a good contribution. I think it can unleash a lot of positive elements in terms of cost efficiency, in terms of having also more transparency, coming back to the point of trust and having solid governance. And I believe, to be very honest, when I go around in Europe, also in a number of member states, the situation is from the consumer side, from the citizens, that in many countries they don't even want to listen the word private pension. And so that's where Europe can also add a value, because I really believe that if we have something coming with a European stamp that gives more credibility, more stability, the recognition of better governance, And that needs to be, of course, well supervised. And that the European citizens will trust more in this than in, looking at a number of situations that we had in a number of European countries where some, kind of pillar one biz systems, as they are known, have been basically, nationalized. And that gives really people the notion that, I'm contributing, but then the state takes back that. So I think that the PEP can help on all those situations. It will not be, of course, the silver bullet. There's no silver bullet on this, but it can be really, and it should be. And as the point, as you said, of course, on the way that the member states will look at this from a fiscal perspective, I think it's fundamental at the end of the day. And again, I think also the Commission can have an important role in here, because I think the fundamental point is what Lard mentioned. What you're doing when you're giving fiscal incentives to sound private pensions, it's just a logic of a long-term sustainability. Because if you don't do it at the short term, you will have problems in the future, later on. Yeah. So, if you give some fiscal incentives now, you will of course have you collect less money, but you're doing this in the long-term perspective. So what we need is really this concept of a more long-term thinking, also to come to political decisions and to come to the decisors. And it's of course difficult, that's true, we know it, because you lose at the short term and your mandate is a short-term mandate. That's true, but I think it's up to us also, both in the regulatory side and in the private sector, to really push this agenda in terms of a long-term thinking, which is fundamental for the decisions that need to be taken in pensions. And by the way, what we're talking about natural catastrophes, it's the same thing. It's also the long-term thinking that needs to be there. And I really believe that the PEP can be a positive signal, also to bring European citizens to understand that the financial sector can do something for them, which is something that in this post-crisis ambience, I think it's really, really needed.
Thank you very much. I am receiving some very interesting questions from the floor, so I would like to take them now, because they come back to some of the topics and some of the reflections that were made by some of the panelists. I have two questions on the concept of auto-enrollment. One asking some level of compulsion, is that imaginable on EU level? And the second one, talking about complementary retirement funded pillars, what is the panelists' opinion about their status? Are they in favor of pure voluntary systems, compulsory, or maybe semi-compulsory, such as auto-enrollment? What are your views on these two very interesting questions? I think Who would like to take the floor? Lard, please.
Yeah, so when I think about compulsory, it depends what you mean, right? Yeah. So I think compulsory in terms of auto-enrollment and opting out, what the governor was just giving as an example from the US, I think that's a good idea. If it's about compulsory in the sense that you yourself need to save for later, then I think that's also good. The compulsory nature should, of course, not be in the open competition on who should actually manage the money and who should actually carry out these contracts, etc. There should be real, good, open, transparent competition so that the cost of, which is important, the cost of all that retirement savings are maintained at an appropriate level. Exactly. And, to go to the former panel, that the simplicity, the communication, and that we compete on that one as well, so that pensions become something that becomes alive more. Exactly. So the compulsory nature there should disappear. Yeah.
Thank you. The compulsory and of course the angle of competition is an interesting one, and I understand that it's a source of concern in some of our member states in Europe. And I have here a question from a consumer representative, if I'm not mistaken, asking, what would you say to Central and Eastern European countries that reformed their pension systems some 10 years ago and are now reverting to the previous arrangements by dismantling Pillar 1.5 in example? Yep. And this person is mentioning Romania, Poland, Hungary, asking for your views on this. Gabriel, maybe?
Yeah, I can. I made reference to that. I know that
Yes.
This is something that, you know, as I said, when I go around in Europe and in these countries, that's very often mentioned as a, you know, a critical fact for people not believing in what they perceive as private savings. And the fact, I think, it's that, and coming back to the first question on the element of auto-enrollment, I think auto-enrollment can only work if you really have a strong governance element and, you know, an element where people can really trust that this is, you know, well governed, that there will be no possibility of state interference in the sense of nationalizing these private savings, but also by making sure that there is strong and appropriate supervision of these mechanisms. And that, I think, it's, you know, it's the basis what we should have. The situation in these countries is that, of course, the reforms were made adjusting the social security pillar and transforming it in a, you know, mix between private and public, and the incentives that are there from a public perspective. You know, when a government is in difficulties from a tax perspective, from a fiscal perspective, this is something that you can get. And believe me, for example, one of the most difficult things that I've had in EIOPA is to receive letters from European citizens from these countries that have contracts with pension companies in those countries that have in their names the names of the big insurance groups in Europe. And I need to respond to them, sorry, I have nothing to do with this, because this is not under our remit. This is a Pillar 1 system provision in the different countries. No, I can tell you, no European citizen understands this. And this is something that we should really reflect. And that's, again, why I believe that the PEP having, you know, a European stamp, it gives, I think, another level of assurance and confidence and trust for the European citizens in pension provision.
Nathalie, may I add something
Dirk.
to this? You talk about compulsory. In the United States, at least, Social Security contribution is compulsory. You see polling data after polling data that the millennials in America, they say, we know we must pay it, but we have zero expectation that we'll ever receive anything from it, okay? Now, millennials and everyone younger, 50% of them will turn 100. I suggest to you a future millennial at age 85, attitude will have changed. I want my money, okay? Yeah. The other thing is we have to be forthright. Social Security was never, ever intended to be the only source of retirement income. Mm-hmm. And so if we're upfront about that, then you need to have a component. And again, that's why this industry is absolutely key to the solution. Yep. I do believe that the automatic enrollment is necessary. Yes. Mm-hmm. But because we believe in freedom and not mandates, exactly. Mm-hmm. You give them the opt-out. But I'll tell you what, after a couple months in that, and they begin to see that it's building, they're going to let it ride. I agree. And it's, my goodness sakes, it's about, what's the contribution on a weekly basis out of the paycheck or the monthly check? About the equivalent of a Starbucks cup of coffee?
Beginning early, huh?
Yeah. Yes. Beginning early. You got to put it in those terms.
Beginning early.
Or I went to Muck Cafe yesterday. Pretty good.
We've been very much talking about the situation of employees and the contributions and the private savings in view of retirement of employees, but there are many people who work as self-employed. Yes. Yeah. And we believe that our proposal for a PEP is something which will be very interesting for the self-employed. But is there something more, something else about the situation of the self-employed where you think that the state, the European Union, or industry in particular should or could play a great role?
Well, in South America, the self-employed is really a big problem because most of our systems are designed for employees. Yeah. So I think that you need to merge other social security systems to have an integrated solution for them, working compensation and health and things like that. Sometimes our systems don't work very well for them because they are designed like silos. in terms of pension, health, workers' compensation. So I think that the solution for them, one of the ideas is trying to have integrated solution for them and not these silos products.
Thank you. I'm getting another interesting question on how important is the role of the trade unions in this debate. Do they share the same views? Well, I can say that when we have been preparing the PEP proposal, we have received input, including from employees' representatives, which were supportive to this. But would any one of you like to react to this question on the role of trade unions?
Well, I think the role of trade unions, I would argue, it depends a little bit country by country how it's organized, but the role of trade unions, I think, is very important. And what I would find very important is that the trade unions are observing that the world is changing, and the world is changing fast, that the labor employment is changing. We're talking about the self-employed, we're talking about temporary contracts, we're talking about different ways of labor agreements between private persons and companies, etc. And I think that this kaleidoscope of a changing world requires a different answer than the entitlements of the past. So what I also believe is that, that trade unions and employer associations together could form a very powerful combination if they start to share their views about the future, understand that the productivity today is done by a couple of people by a few people for a number of retirements, but that in the future, you know, the number of people working for retired people is much smaller, so that we better address the solidarity of generations in an appropriate manner. Exactly. And I think that the debate needs to be constructive. Yeah. And in not every country, yes, I see that in Europe, I see that forward-leaning, constructive view, and I think it's very necessary to do that. Otherwise, I'm afraid the inertia that we talked about very early on in the conversation is going to take over again, and nothing will change. And again, time will be ticking. This bomb will be ticking. Yes. And the demographic reality is completely agnostic of the debate that trade unions or employer associations have. So I would say it's time to act.
Yeah, and if I may, I totally agree with this, and I think both the trade unions and the employers associations really, they should be at the core of finding the intergenerational balance that we need in here. And from both sides, I think that reflection needs to be there, because it's impossible, even in the second pillar, it's impossible to sustain a situation where we all know that there are, you know, a number of generation that the last generation that retired with good pensions, that the generation that is now close to retirement still have, you know, a good promise of having a good pension, but everything will be paid by the next generations, the ones that have now 20s, 30s. And I think that trade unions need to really also grasp this. It's not just about, you know, of course, fighting the vested interest of the older generations. It needs to be thinking about the new generations, because that is the kind of thing that I think we will regret when we'll be older, when our kids will ask us what we have done.
Nathalie, if I may add, the role of the trade unions is to advocate for people, for the workers, all right? It's a very appropriate calling. Many trade unions have seen that their longtime members are getting hurt, because you may have major cities that are on the brink of bankruptcy, and so they have to reduce the pensions in order to become solvent as a government. General Motors, with the pension problems they were having, part of their solution was Prudential US bought the pension plans, because this industry is in the business of understanding risk and spreading risk. Yeah. All of these entities should be in conversation. We have facilitated meetings where we invite them to come in so that we can all see if it's the same picture and the same projection of this ticking situation. The American Association of Retired People. It's very powerful when the industry and AARP and other entities are in a coalition, are partners. So, I mean, that's positive.
We often hear that the young generation is not really interested in putting money aside for their old age, either thinking, anyway, I'm the next Mark Zuckerberg and I will not need it, or thinking, well, it's in so long away that why should I bother? And there also there might be the issue of the available income, and have little money, I have to take care of my future family, and so I cannot contribute to this. But there is one important element among this, which is the awareness of the young generation about the need to save for the future, and the issue of financial education. And what role can we all play in there? Because, you know, we as the Commission, EIOPA, etc., we can very well publish beautiful political communications on financial education. I'm sure that all those who are already financially educated may possibly read them, but I am absolutely certain that those who are not are precisely not going to look into this. So is there a role that the industry could play in getting people more financially educated?
But of course. Yes. We should all do that. I mean, this is one of the biggest issues. I think this is something the industry cannot do alone. But there's, of course, the money weeks, and where the industry reaches out in schools and teaches about this to children, etc. We need to use new technology. We need to use the Zuckerbergs of this world and what they bring to communicate intensively, simply, and in plain language, in a very intuitive manner with consumers, so that they understand and get more educated over time. But at the same time, I would also hope that it's not only the industry that works in this, but it's a concerted effort. Yeah. Concerted effort, for instance, with governments, where we could, what I would suggest, why not, if we all believe this is so important, is basic financial education not part of the normal curriculum on schools? That should be. So that people learn in every country, at schools, at a very young age, simple, basic household finance, so that they start to get interested and exposed to it. So I think the combination of working together here would be, I think, helpful. Yeah.
I think that we have an opportunity with this digital area, with more information about our clients, not sending those general messages to everybody. And we have, at least in our company, 40 clusters of different clients. So it's different when you talk to them saying, I know you are a good man with 3 kids. I know that you are supporting your house, and we know that you have not formal jobs, but you have earned. So I think that when you can send messages more tailor-made to different clusters, you have more chance to have a response and then to begin a dialogue and to have the opportunity to have more information and, of course, better advice to build a pension together.
If I may, it's not only about education. I think that we have our share of responsibility as well in what products we offer them, no? Which is the value proposition that we are offering them. They are different types of consumers. We have to understand them. They are looking for different channels, and it is very difficult to approach them talking about retirement. You have to talk about much more tangible things, short-term tangible things, giving them the possibility of contributing not with huge amounts, but for example through regular premiums, accumulation products. I think it is very important that we do an extra effort in the way we rethink our value proposition for our millennials and our young people.
Yeah. Nathalie, may I just add this component as well? There's a wonderful group in Washington, D.C. It's a consortium, but every year they have a contest, and they reach out to the universities throughout the United States with a particular question. And then the winning team, those students are flown to Washington, D.C. I mean, these are bright young people, right? But I've said, what question do you put to them? And I said, I would suggest this should be the question. Write an application that young people would find so engrossing they want to be part of this, and it is based on financial education, see? With simplicity, which is certainly part of this. But I don't know of too many companies general counsels that would say, yeah, I'll take that 30-page prospectus and I'll drop it down to a page and a half. No. Okay? But I think you could have an executive summary that does properly reflect the key elements. And we've been working with regulators to say, would you approve this process so that we could at least put the executive summary. If there's anything in there that's inaccurate, point it out, but could we please just help move toward us in that direction? I remember also Ricardo Arias, who heads the Mexican Association. He had this beautiful event of over 1,000 people, but they had a contest. And I remember the young Mexican students that were there that had won, and each of them received a computer. And I remember a young man sitting in the front row, and he had a tie in his hands. But he turned to one of the business executives behind him, and he said, "Sir, could you tie this for me? I've never done it." Okay? These are the bright young people, all right? That young man won a contest. He wants to be part of this. They're willing to turn to the business community, to people older, and say, "Would you help me?" My goodness, that's the creation of a beautiful forum. I always leave these things an optimist. I really do.
Oh, me too.
Yeah. If I may just very briefly, I think, you know, if we look back in the last, let's say, 10 years, there's been enormous progress in this area, to be very honest. We see, you know, throughout Europe, there's many, many countries where there are public initiatives also together with industry associations, etc. So I think that there's been a lot of progress in this area. I totally agree with the point that it was made that, you know, the thing that we need is to put this more in the curriculum of schools, you know, basic concepts about, you know, financial basic concepts. And also, by the way, also the concept about risk, which is something that, you know, the normal youngsters don't have a clue. And that is something which is, I think, very important for, of course, an household. But let's also be completely clear, you know, the panacea that we had, I would say, 15 years ago, that the way to go is to, you know, have financial education, educate the consumers to be rational decisers, and then let's give them all the information that they will be rational and that they will take the best decisions. That doesn't work. And we should really, you know, take care of that. So what we need is to give more simpler information, more comparable information, and of course, expect that people get more aware and interested. And I think that, as I said, if we do that in schools, we can have very, very good results. But let's not think that all of us, the regular man in the street, is a rational decider. We all have our own biases against, you know, lots of paper, lots of information. We want also to have the industry to provide a service to us in terms of having a simple way. And I think that that's a responsibility that we should share between the industry and the regulators to make it right. Huh?
Yeah, correct.
Yet another example which shows that there is much to do and there is much to do together. And it is only if we act all together that we're going to get to meaningful results. We are getting towards the end of this session, and we would like to give people in the room the possibility to ask some questions. I have mentioned some of the questions I received. I will have one more on PEP, so I will come back to the PEP debate. But would anyone like to ask a question to the panelists? Yes, please.
The other day I was...
We have micros somewhere. Yes, here.
Yeah, Javier, good.
The other day I was speaking with an advisor on human resources, and she was saying about how the world is going to move towards Netflix, net jobs. And here we are listening about trade unions and enterprises. Aren't we a little late in thinking of pension schemes linked to companies where companies might not exist in the future anymore?
Yeah, and I appreciate your point there. I don't think we're looking back and saying we got to go the way it used to be. We know the world is changing rapidly. It's no longer automatic that when a young couple get married, they get a life insurance policy. It just doesn't happen. Maybe even after the firstborn. However, I happen to be a bicyclist. And one day, I received this, what do you call it, a cookie or a notice, that I could look at life insurance for bicycle riders. Coming from where I come from, well, I want to see what this is all about. But what they said is, if you're a bicyclist, truly, you're probably in pretty good shape. If you happen to be with the Strava app, if you'll give us the link to your app, which we can see you actually have been doing 20 miles a day, we're interested in using customers. I think we're seeing more and more of that. I was mentioned earlier about lemonade, okay? That's what's happening. And once we bring them in, and we have to be as creative in capturing their imagination as they are, because they're moving on quickly. And we've got to capture the imagination.
Well, I think this is also, just to add one thing, this is also about portability, right? You know, if you want to live the life that you want to live, you want to work for you, one day you want to work for somebody else, another day you want to work together and start up your own firm for a while, you want to have a sabbatical for a while, for 3 months, or you get married, whatever. You should be able to have your pension as personal as you can get it. You should also have it as portable as you can get it. However, there is a cost to that. And that there is solidarity of risk and risk sharing, the biometrical risk, etc. I mean, there is a real big benefit still to do that together. So where you can find and organize that, maybe in different ways than we organized it in the past, where you can find new ways of organizing that, that would probably be the sweet spot, right? And I do see a lot of models already developing that way. And what I think we need to do is make sure that regulation is following that and allowing that to happen and facilitating that. But you're absolutely right with your observation. Totally agree.
Yep.
Any other question from the floor? If not, I will come to the last question received, which is on the PEP. In the PEP debate, there are stakeholders that suggest that you can have pensions that are safe and fully flexible to adapting lifestyle decisions. Do you agree with this?
Well, I think it should be possible. I think it should be possible. I think we need, of course, in the context of the PEP, we have the idea of having a number of characteristics that are basic, but then also to leave the freedom for the industry and the different competitors, you know, to define their own characteristics of their own products. And so I don't think that there's anything in there that, you know, is a major obstacle to do that.
Thank you very much. I believe this has been a fascinating debate. I would like to thank Insurance Europe for having set this topic, and we have had a very interactive session. We've had wonderful contributions from the panelists. Dirk would like to say something more.
If I would just say this, Pilar, Marengo, you told us this would be a magnificent venue in Madrid. You were right. It is world class, and thanks for setting the table for us.
Exactly.
Very good.
So,
well done.
Thank you.
Well said.